Welcome back. You're still tuned into Midcap Masala right here on ET Now. And from one management to another, let's get in conversation with the management of Affle India. Remember, the stock has been in focus for the last several trading sessions on the back of an acquisition. We now have Mr. Anuj Khanna Soham, Chairperson and Managing Director and Chief Executive Officer at Affle3I Limited, now joining us. Thank you for taking your time out. And first up, take us through the acquisition rationale. I understand at the end of the last quarter, you did tell your investors that you're looking to grow via acquisitions. Take us more through the company that you've acquired and what will the synergetic gains be as a result of this?
Thank you for having me on your show. So the acquisition of Adcolony's assets, which includes the technology assets as well as the trademark, the name Adcolony has a very, very strong reputation, credibility over many, many years in the advertiser and the publisher's overall ecosystem. And we believe that this acquisition is very strategic as part of our 10x growth plan. When we look at the consumer's side of the equation, it gives us the ability to be on the device integrated with apps on the SDKs on iOS and Android, driving deeper, more personalized recommendations and driving more premium conversions with the consumers for our advertisers. As far as the advertisers are concerned, we bring them the reputation, the track record of Affle plus Adcolony, and we also give them a deeply verticalized capability through our algorithms and platforms across the advertisers' various industry verticals, where Affle is today very diversified and has a lot of case studies with those advertising verticals. On the publisher side, again, integrating with the publishers to look at deeper signals, better audience intelligence, and therefore delivering much better monetization for the publishers. So across the board, strategically, we believe that this asset is valuable for Affle3I consumer platform tech stack. We have been also evaluating this asset since year 2020, 2021, where we had an opportunity at one time to buy the company, not just the asset, but the whole company for over $400 million. But we declined that opportunity at that time. It was too large and too complex for us because we just gone public in 2019 and we didn't want to do a biggish transaction then. 5 years later, we are able to buy the entire tech stack, the tech assets, and the trademark at a fraction of 100th of the cost of what we were expected to pay at that point in time. So I think for us, this is a very, very, very meaningful and an impactful transaction. We think it'll unlock great value for all the stakeholders going forward.
Hi, morning. Congratulations on the acquisition. Can you quantify the value unlocking that you're speaking of? Can you give us any idea, any numbers on what the revenue and margin synergies could be and how quickly can Adcolony be integrated into your core operations?
So in terms of integration, I would say it should not be a very significant effort, maybe 3 to 6 months at max, that we should be able to integrate it meaningfully. I think we can hit the ground running quite quickly and we'll see some meaningful impact going forward. We believe that in developed markets, we will see a much more meaningful impact from this acquisition. Of course, there will be overall global impact as well. But there are two dimensions that we think we will drive better. We'll drive higher volume of premium conversions, better quality of conversions with the consumers on their devices, with the Adcolony tech stack integrated with us. I think there are already integrations with many publishers on iOS and Android. We will go and reactivate those relationships, re-inspire the ecosystem towards coming back and seeing that we are breathing life into Adcolony like never before. So, I would not quantify anything beyond that, but I would say developed markets would see a faster growth rate going forward because of this acquisition.
Understood. Two-part question. One was any other acquisition that is lined up, because you have told us that you're looking to grow via acquisitions. And second, FY27, you have already shared your revenue growth and margin guidance. Given how the first quarter of FY27 has been so far, does your guidance remain intact?
Our guidance is for organic growth of at least or around 20% year-on-year basis. We would see that trend continuing also on a quarter-on-quarter basis, and barring a few quarters, maybe we do a bit more, and some quarters maybe a bit less, but it should be in that kind of guidance range. Is very predictable, very dependable, And I think we have done that with our track record over the last many, many years. 6 years as a public company, 2 years prior to going public in roadshows. And I think over the last 10 years, over a decade plus, we have shown consistent pattern of growth. And I think this pattern of growth should continue to see itself in 2027 and beyond. It's our midterm to long-term guidance. I think the bottom line financials should do better in terms of growth because we are a scalable asset light platform and we expect our revenues and margin, revenues to grow. But of course, we expect the bottom line EBITDA to perform better than the revenue growth. So I think our goals are very clear and our growth plans are very dependable.
So you're looking at the bottom line growing faster than the top line. On that note, Mr. Soham, due to paucity of time, we'll have to end this conversation here. But thank you so much for your time and congratulations once again on the acquisition.
Thank you.
Okay, viewers, with that, we're completely timed out on this edition of Midcap Masala. From Ashesha, me and the team that put this show together, thanks so much for tuning in. But keep watching ET Now because buy now, sell now takes all the action.